Folks, welcome to the Taylor Tax Show podcast, the podcast that helps highly paid, highly taxed, and high profile taxpayers save a bunch on your taxes legally. This is my partner, Big Al Darnell. Say what's up, Big Al?
What's going on, everybody?
All right, so for episode 6, we're going to be talking about how you can save on taxes by starting your own business. And to put this in context, there are 6 levers to help folks save a bunch on taxes legally. 1, start your own business. 2, invest in real estate. 3, use life insurance strategically. 4, do estate planning. 5, do strategic gift giving. And 6, either start a private equity fund or work in the private equity industry. So, Big Al, let's get to the topic of the day, starting your own business.
Yes, sir.
Why is starting your own business such a powerful tool for saving on taxes legally?
Well, I'll tell you this. First of all, this is one of my favorite topics, just because I've been an entrepreneur since 2002. That's all I know. It's all I know. All right. But starting a business is kind of like the Swiss Army knife of taxes. All right. So what you can do is it unlocks and opens up so many tools that you can use in order to save on your personal income taxes. Some of those tools include opening up write-offs with your house, opening up write-offs with your children, with travel, with your vehicle, with future planning and retirement, and so many other things. So it's a phenomenal tool in order to win in this game of taxes. What are your thoughts?
Well, I love that Swiss Army knife analogy because it is one of those things where if you structure your business and you do things legally, you can save in so many areas in taxes. And when we were preparing for this podcast, we talked about just the life cycle, if you will, right? So let's say, for example, you have a family and you're blessed to have children. Well, starting a business allows you to employ your children in the business. And I'll let you talk a little bit more about that, Big Al.
Oh, definitely. So unlocking the tax write-offs with your children, for those that have children, we all give our children money and give our children things. What if a lot of that, what you give them, you could write off on your taxes? Now, here's the thing, is that you can't directly just do it like that. However, what you need to do is you need to pay them as employees. And when you pay them as employees, it opens up so many other doors. So in order to do that, though, what you have to make sure that you understand is that if you want to avoid the FICA taxes that are associated with paying employees, then you have to hire them under a sole proprietorship that only you or you and your spouse are owners of. And they would be children employees of you. But some of the things that you can write off, you can pay them up to the standard deduction every single year, which currently is around $14,000. And then now that they have earned income, that opens them up to invest in a Roth IRA. But that's just the tip of the iceberg. But that's one of the huge benefits of owning your own business. You get to hire your children, pay them up to $14,000 per year without them having to file a tax return or pay any taxes on that income, yet and still it's a legitimate write-off for you. But please consult a tax advisor, because there's a specific way that you need to document their duties, the hours worked, and their employment, so that you're not just so that you're covering yourself from a legal perspective on the tax game.
Excellent, Big Al. And another thing we spoke about is when you start your own business, you also unlock a bunch of savings when it comes to your house or your housing. So whether it's a home, whether it's an apartment, whether it's a RV, whatever constitutes your home, mobile home, right?
Yeah.
And the beautiful thing about this, folks, is there's such a thing as a home office deduction. So when you start your business and you have a space that you dedicate exclusively to your business, and the IRS is very particular about this, you have to make sure that that space doesn't double for anything else other than your business. But once you do that, there are different methods that you could use to deduct a portion of the expenses for running your household as part of your home office deduction. So that unlocks things like being able to deduct some of the expenses for your utilities on a percentage basis in relation to the space that you use for your home office. So it's a very powerful deduction that can unlock a lot of savings. Big Al, you also were telling me earlier that vehicles are a huge unlock when it comes to deductions when you have your own business. Could you say a bit more about that?
Yeah, of course. So here's the thing. If you're just a single individual and you have a business, you're more than likely going to have to keep up with the business mileage versus the total mileage used. Right now, you can write off 65.5 cents per business mile driven. However, if you have two vehicles, or if it's you and a spouse and each one of you all have a vehicle, then one could be totally attributed to the business, obtain a complete write off, and then the other one is for personal use. But when it comes to that, there are additional parameters, of course, to make sure that you legally attribute and utilize your second vehicle as a business vehicle and get those tax write-offs. But the IRS requires you to keep contemporaneous notes on the business mileage driven. However, there's another way: is make sure that you keep up with your all of your appointments and activities that you have going on. Put it in your calendar, and then at the end of the month or at the end of the quarter, hopefully not wait until the end of the year,
Uh-huh.
you can then go back into your calendar and find the addresses of all these places that you went in order to come up with the business mileage. And
Yeah.
in order to find out the total mileage, what I oftentimes suggest is making sure that you get your oil changed at the beginning of every year. So that way
Uh-huh.
you can kind of see, because they usually list the mileage on there. But yeah, there's so many things that you can unlock with your vehicle by owning your own business and having the business own the vehicle, even to the point of potentially writing off the entire cost of purchasing a brand new vehicle.
Uh-huh. Uh-huh. And Big Al, what about insurance? If you have insurance on the vehicle,
Yeah,
could you,
yeah.
okay, you can
Of course,
deduct that as
of
well?
course. So the thing is that if it's a business vehicle, then everything about it, I tell you, the fuel that you put in, the insurance that you're paying on it, any maintenance and care, license and registration, sales tax, all those are business write-offs. Now, for the majority of people that have to keep up with the mileage
Uh-huh.
that they're using in order to make sure that you're only writing off that business portion, you only have two options. You have the standard mileage expense, or you have the actual expense method to write things off. Now, if you use the actual expense method, they still want to know the mileage so that they know what percentage of your actual expenses to write off or attribute to the business. But if you use the standard mileage expense, you're not going to be able to include the breakdown of insurance and repairs and maintenance, sales tax, et cetera, et cetera. So make sure that you choose wisely.
Okay, excellent. And another thing we spoke about is as you start your business, of course, we all hope to be able to grow and have the business become big in the future. So we
All
looked at
day.
two things when it comes to the future that folks could save a bunch on their taxes when they start a business. And I want to talk about one of them, and I'd love for you to talk about the other one.
Okay.
The one I want to talk about is there's a deduction that you get when you are able to successfully grow your business and you get to the point where you can sell your business. Folks, did you know that you could get a $10 million deduction? Actually, not even a $10 million deduction. Did you know that you could save 10 million on your taxes when you sell your business if your business is gets to the stage where it's worth more than that and you have equity or shares that are worth 10 million or more? The first 10 million you get tax free. And for those that want to go a little bit deeper, send us an email to info@tailoredtax.ai, info at tailored, taylord, tax.ai, and we will give you more information on that. Big Al, let me let you take it home with the second thing that starting a business unlocks for you in the future.
Definitely. Definitely. So when you start your own business, then guess what you could do? You could start your own retirement plan associated with the business. Now, there are several different options, and clearly I don't have an exhaustive list, but some of them include a solo 401k, a SEP IRA, um, solo 401k and a SEP IRA. And with those, many of them with a SEP IRA, you can contribute up to 25% of your earnings. And with a solo 401k, I believe it's still up to the $66,000 complete amount that you put in from the employer's perspective and the employee's perspective. And what this does is it allows you to stash away money right now that you can get an immediate tax write-off on so that you can prepare and plan for your future. I believe they also have like a solo Roth 401k and Roth options for a lot of these plans as well. Now, with the Roth option, it's a beautiful future for when you pull the taxes out, since all the earnings will grow tax free. But that means that you have to use after tax income to put it in. So you're not going to get an immediate tax write off at that moment in time. However, you don't have to be associated with a large company in order to be able to have a large retirement contribution in your own retirement plan associated with your business.
Oh, fantastic. Thanks, Big Al. So, folks, as always, we're here to make sure that highly paid, highly taxed, high profile taxpayers save a bunch on your taxes legally. And we want to make sure that we level the playing field for you all. Thank you so much for listening to episode 6 and watching it on YouTube. See you soon.